Hi there, Robert Wolf here again with Terra Firma Business and Financial Consultants. I'm an asset coach and tax strategist, so I just wanted to take a moment. And one of the things we constantly hear about from advisors, tax people, life insurance agents, financial planners, the financial world as a all, we talk about common sense. And a lot of times common sense doesn't really reign true with government, right? So one of the things specifically I want to bring up is the feeling that we all believe taxes will go up, right? Common sense, they have to. It's a math problem. You can't have a government spend $4 trillion in a 12-month, 18-month period, 24, or even a 10-year period, and not think that taxes have to go up to pay for that. But as we have found on an ongoing basis, we continue to be proven that common sense is not common, especially when it comes to our government. That's not necessarily a knock, it's just reality. So when we look at this and we try to understand how tax rates, and we hear that tax rates are going to go up, all that kind of stuff, you can look at historical numbers that we are at historical low tax rates. But here's the thing, even though we're at historical income tax rates, doesn't it really feel like we still have a tax problem? Of course, because one of the things we miscommunicate about is all the other types of taxes that are occurred, that they create. And really what we have found is when Congress gives us tax deductions, reductions, they also give us increases. There's kind of a balance, so to speak. They take away here, they give here. They give there, and they take away here, right? That's just kind of what they do. And when you look at it, the reality is you and I talking about income tax rates, they're going to go up. Well, the reality is taxes need to go up. It is a math problem, but the government is also very creative, such as the Fed buying debt, the Fed buying mortgages, the Fed doing this, the Fed doing that. The Treasury doing this, the Treasury doing that. Them printing this, them printing that. They use these various tools to keep what at bay? Our fears and our concerns. But again, common sense, it says this isn't common. There's something going on, and at some point, the bottom has got to break through. There's only so much weight you can put in a box before the bottom breaks. And so that's what we're talking about, and that's what we're concerned about. I want to show you a little chart here from the Tax Policy Center website. And I think this is important to see, and this is as of today, so it's 1913 to 2020, okay, the highest rates possible, and this is as of February 4th, 2020. Okay, take a look at these tax rates. The highest marginal rate right now as 2020 was 37%. 10 years ago, it was 35%. Right? So here we keep saying, well, tax rates are going to go up, and we've been saying that for 10 years. What did they go up? 2%. Right? So what about 10 years before that? They were at 39.6. What about 10 years before that? They were at 28%. 10 years before that, they were at 70%. What changes is the margins, right? So what will they change to? Will they go up? Will they go down? Well, we know in the current administration, they're talking about increasing them. Increasing them to what? What they were about 5-10 years ago, right? So we may see a 2% increase, 3% increase. But what's unique is their creativity in creating taxation in other areas. That's what we got to be careful of and be worrisome of. So at the end of the day, we need to focus on what? We need to focus on the here and now. We need to focus on a plan, a design, understanding how the IRS views the taxes, views assets, views income, and as business owners, what tools do I have available to me? That is the key. And being able to have control over your cash flow as a business owner. Because at the end of the day, that's why we're not happy with taxes. We will all agree we want to pay our fair share. But what is your fair share? Has anybody laid out what your fair share is? And how that fair share can go up or go down based on your decisions as an employee of your business and as an owner of your business? If the answer to that question is no, somebody hasn't shown you that, Well, you gotta find somebody who can. Because at the end of the day, when it comes down to it, it's your personal lifestyle. What are your personal expenses? Think about it. What you spend individually is what drives your income need. So if I need $5,000 a month of expenses, what kind of income, gross income, do I need to pay taxes to net out $5,000 in expenses? So if my expenses increase, my income increases. If my expenses decrease, my income decreases, right? And as a business owner, we have tools available to us. And the major tool we have is the IRS tax code. Use it to your advantage. It's there. How do you use it to your advantage? By understanding and having a team that understands it, that can understand and translate the dialect of the tax code English that is being explained to you openly. If you have any questions about this, please feel free to reach out to us. Add some comments in the section below. If you're not a subscriber to this YouTube channel, hit the subscribe button, hit the bell, get notified when we do other videos. Add a comment. If you like this, give us a like, thumbs up. If you don't like it, well, go somewhere else. Our goal here is to help business owners understand what a lot of times we don't understand. It's just confusing. There's a lot of stuff out there. That's what we're trying to bring to the forefront, is some common sense, some understanding, realizing that common sense does not exist out there everywhere. So, again, please subscribe to this channel. Give us a thumbs up. Add some comments. It helps us improve this channel and content that we provide to you. And we hope you make it a great day. Thanks so much.